Hey guys, Rajib here from Financial Hub India. Now this is a continuation of our investment trade where we've been doing the multi-time frame analysis right from the weekly, then daily, and now today we will be doing the hourly and the 15-minute time frame chart analysis, right? So this entire series is just to show you guys that how we do the multi-time frame analysis in the price action trading, just to have the broader picture of overall time frames or overall price actions happening in the stock. All right, just a quick recap. In the weekly time frame chart, we have seen the price is in an uptrend, and this is a change of trend area, and we have this flip support area here. So we form a good level of support range here, and anytime this range is broken and price starts trading below this support range, we will assume that the trend momentum towards upside is over, and we will start looking for sell signals depending on the kind of price actions happen below this level of support. Okay, and our ultimate target will be this support level. All right, and then in between we have these two support lines where we'll be seeing the price action to trail our stop loss or to exit the positions if we open something in here. Now also we talked about that currently we are looking for some buy signal formations over here. If we find something, then we will buy it. In case we miss the move, we don't get anything over here and price starts shooting up, so in that case we will be diving down to lower time frames like daily time frames. These are weekly charts. We'll go down to daily time frame chart and we'll try to catch the momentum from here to here. This run up, we'll try to catch it up using the lower time frame key levels like daily or maybe hourly time frames, and this is our ultimate resistance target. All right, now let's see to daily time frames. In daily time frames, we see that currently the price is in a flat market structure in here. All right, and here is the current market. Now since we know how to trade a flat market, we'll be trading the top to bottom or bottom to top. We'll sell it when it reaches to the top, we'll buy it when it reaches to the bottom here, and in case we get a breakout above this level, then in that case we'll try to catch the breakout momentum above this level, or a pullback trade. Like once it breaks out, then on a pullback we'll try to buy it back here with the target of the 219 level here. All right, so that's the plan here. Either we'll trade inside this channel or we'll trade above or below this channel with the breakout momentums. Now also we discussed that we are not really looking for reversal formation happening over here, and the reason was that the price is currently moving in a flat market structure. So in a flat market structure, if there is a reversal formations, then that's not a valid formations basically. And also here we discussed about a key level formed in here. Here we talked about the importance of the current key levels, the key levels formed in current price actions, and the key levels formed in the older price actions. All right, so as far as I remember, these are the things we talked about, right? So for the people who are directly seeing this video, I would request you to go back to our part 1 and part 2, where you will get the brief explanations and study of the weekly chart and the daily chart time frames. Right, and then you come back to this video. That's how you will get the sequence, and you will understand the overall context we want to cover in this 3-part series. So since we have been talking here that in daily time frames we are not able to trade or reversal trade in here, then what should be our strategy to follow in this kind of price action scenarios? So now we'll have to go down to a more lower time frame, which is 60-minute time frames. Now in 60-minute time frames, you can see the range properly here. Right, 1, 2, and 3. So the flat market condition, what we have been saying in daily time frame here, over here, is much more clear in our 60-minute time frames here. Right. So here, what we can do again. We know how to trade a channel. So you look for buy signals here, you look for sell signals here, sell here, buy here, sell here. So right now the price is on the top of the channel. So if I get any kind of reversal formations here, then I can go ahead with the trade here, and my target will be here. Alright, and then again I'll be looking for some trade signal over here, and my target will be here. Now here the green lines are the intraday key levels I have drawn based on the supports and resistances. Alright, and the red lines here you see, these are the daily time frame line. If you remember the first session, part 1, I talked about if we see the price is jumping on a key level for a number of times, then the key level loses its importance. Right, so and that's what it's happening here. Price comes on here, and again it goes up, so it's actually jumping on the key level. So since the price is not reacting since the price is jumping around key levels up and down here, so for us this key level will not play a key role to trade this range here. So that's how we are supposed to trade a range when that range forms on a key level. There can be range which may not fall on a key level, where we don't need to worry about that, okay, we have a key level in between, then how to trade the range. But when you have a clear range formed, in between that range you have a key level, in that case you don't need to worry about the key level reactions over there. Alright, so this is one way we can trade. So tomorrow if we see something happening here, we can go ahead with this trade. This is our first thought. Now our second thought is that we'll be looking for a breakout trade above here, or a breakout trade below here. Either way. So either way we can trade the breakouts using our breakout trading strategy. And in case we missed that breakout trade, so in that case we can always look for a breakout and a pullback. We can again look for a trade over there. Alright, and the same goes for here. A breakdown and a pullback. Get into the trade here using your pullback trading strategy. Now I want to share one more thing with you is that once we see a breakout, let's assume we got the momentum above this level and the price is now moving up. So in that case, I have drawn some key levels in 60-minute time frames, which is this one and this one. So this one is coming from these levels, having multiple touches. So this is a key level in 60-minute. And also this level comes from, let me zoom in, this one. This was a big pushback. And again it goes up, reacted as a flip support level here. Alright. So it comes in here. Alright, so in daily time frames, if you see, we don't see those levels, those 60-minute levels clearly, right? We see, okay, the price has a resistance target right over here. But when the momentum starts above this trading range here, then what about catching up the momentum from here to here through its way up? So there are two things. One is, when you enter the trade right after a breakout above this level, this is one entry, and then you can use this level to exit your trade if you see some reversal sign over there, or to trail your stop loss using this level, or maybe for a new entry after a breakout above this level with a breakout trade above this level, or maybe after a breakout and then a pullback trade on this level. So when you have these levels drawn, now you know where to trade. You know where to think about this running trade. In terms of exit, in terms of entry, in terms of trailing your stop loss. Now here, from daily time frames, you got this line, right? As a resistance line. And it's not just before that line, we have a key level of resistance line coming up right from here. So since this line is very much nearby, it is 189 and this line is 192. Since this resistance is very much nearby to this resistance, then I would say we will be considering this one as a resistance zone, since the difference is not much. Alright, so in that case, if you enter a trade with a breakout in here, or maybe you are adding some positions here and you didn't exit the trade over here, since you don't see any kind of reversal, your ultimate target should be the lower range of this resistance zone. So instead of waiting to exit the trade in here, you will be exiting the trade right over here. Have you seen sometimes you entered here, it goes up, nicely goes up, you're happy, but just right over here, your target is here in daily time frames, but just before hitting the target, it just turned down. And you got frustrated. So a lot of times the reasons behind it is that we don't see the lower time frames and we don't see the key levels of the lower time frames. And that's where the price reacts. See, the key levels are very important in every time frame. But again, the higher the time frame is, the importance of the key level, the significance of the key levels increases. 60-minute time frames is the boss time frame. Alright, and you can't ignore the key levels in 60 minutes. If this 60 minute 189 level had no importance, then why this happened? Why this happened? Why this happened? And then after a breakdown, look at the one-way momentum here. So this level has its own importance, which is not seen in the daily time frames, but you'll have to see in the lower time frames. So hopefully it makes sense for you guys. Now let me dive down to 15-minute time frames, and I'm going down to 15-minute time frames for the FinHub India students. This concept won't be understood by the people who are not a part of financial hub. Okay. Now in 15-minute time frames, we can see a good amount of sell-off pressure here. After this good amount of sell-off pressures, do you see where the reversal is? Do you see guys where the reversal formations in terms of a breakouts is showing up? Do you see that? Even before creating the 60-minute channel, it showed us a reversal formations, even though the reversal formation breakout didn't happen, but the setup was there. And the setup was in here. Do you see this? The setup was in here. And as you know, in the course we cover how to catch up the breakouts, and using our strategy here it didn't trigger basically. So a breakout structure was here in place, but finally it didn't trigger here. So the setup was forming and it didn't trigger the entry finally. Now why I'm showing this, because you'll be finding many people are waiting for a candlestick formation over here. But not necessary that there will be a candlestick formation each time for a reversal. Even this pattern we do in the course can give you a trend reversal structure, you know, if you understand the logic behind price action properly. Alright. Now here I'm not discussing about what kind of breakout structure and what kind of entry trigger we see it here, because that's a part of the advanced course. So this 15-minute discussion was just for my people in the course. I think I'm done for the day. 15-minute time frames, still I don't see any kind of reversal formations to trade this channel, but I'll be keep a track here. This channel is very important because, you know, if I just show you the daily time frames, this is the same channel we have been seeing in 60-minute and 15-minute time frames, and breakout in either side will give us a target in here or in here. So we are talking big, right? Yeah, in between there are levels, but this one I marked in terms of the weekly time frame. So it has the potential to go up to here, all up to here. But in between we'll have to keep our eyes open. We'll have to see what's happening in these key levels. But in terms of potential of momentum in this trade, this one or this one, up to here or up to here. Alright, so that's it from my side, and thank you so much for your time in this 3-part series of the analysis. If you feel like it made sense and it can help you to improve your tradings, it can help you to see the market differently, and it can help you to trade better, then I hope you'll be leaving some comments. And please do subscribe the channel to receive further updates, and hopefully I'll be seeing you with a new lesson or a new video updates. Thank you so much.